been learning about value investing, finance, just regular investment for a while now, but you don't know where to go next. You're getting confused about the vast amount of information on the internet. You don't want to waste your time on crap information. You want good information and reliable information. In this series of videos on value investing and finance education, you will find those answers to those questions and much more. My name is Jason Rivera. Welcome to Value Investing and Finance Education.
Hey, Jason here. Today I want to talk about something I get a question about almost every single day. Net income, what it is, and more importantly, why I don't use it. I get the question almost every day of why I don't use net income. What is net income? What is EBITDA? What are earnings? What is adjusted EBITDA? All these kind of things. So let's start off with what is net income. Net income goes by several names. Net income, earnings, and EBITDA. EBITDA is earnings before interest, taxes, depreciation, amortization. EBIT, it's different from EBIT. EBIT is earnings before interest and taxes. So, EBIT is operating income. Again, confusing if you're just starting out, or maybe if you've even been in this a while, it's confusing, all this terminology, especially when net income literally has 3 different names, and 4 if you include adjusted EBITDA. So, why are there these multiple different names? I have no idea. I haven't come up with the terms. That's just what they are. So, net income is all the money the company earns after taxes. After pretty much all expenses are paid, after taxes, after pretty much everything. I don't ever use net income, ever, in any of my analysis. The only time I ever use it is kind of as a comparison to how crappy of a metric it is. Why? Because, well, there are several reasons. It's easy to manipulate. Years ago, I think it was probably 5 or 6 years ago at the time of this recording, GE, one of the largest corporations in the entire world, had a tax rate of 0% as one of the biggest companies in the world. They were able to do this via not operating loss carryforwards and mostly with their accountants and lawyers taking enough time and being good enough to find loopholes in the tax code or whatever the case may be. They got a lot of flack for having a tax rate of 0, especially since Jeff Immelt at that time was an Obama advisor talking about higher taxes and stuff, something along those lines. I don't remember exactly. He was talking about taxes and how corporations spend more taxes, stuff like that. And they had a tax rate of 0 as one of the biggest corporations in the world. So, if you have good enough lawyers, if you have good enough accountants, you have enough time, you can literally make your net income whatever you want, because net income is after taxes. And you can, if your lawyers and accountants are good enough, you can make your tax rate whatever you want it to be. Again, 0%. They made their 0% in that whatever year or whatever quarter that was. Reason 2, I never use net income, is because you can further manipulate net income with what is called smoothing in the book Financial Shenanigans, and that's a fantastic book. I highly recommend. Second edition of that book I think is coming out either soon or it just came out, one of the two. And it talks about how companies do things with their earnings and, again, net income, to manipulate the earnings. One of the biggest things he talks about is smoothing of earnings, which is essentially leveling out. If a company has quarterly or yearly net income that fluctuates a lot, supposedly Wall Street doesn't like that. So they take earnings, if you earn a lot, they take earnings from here, so it levels out a little bit. If you take earnings from, or if you have low net income in a given quarter or a given year, they take income and bring it up to this level with that money they take from here. It's just, again, it's a way to kind of smooth things, make things look more consistent for Wall Street. I don't care about any of that, so I just want to know the economics of the company. Third reason I don't use net income. That's kind of, or let's just go here. The third reason I don't use net income is because that's kind of how I came up as a value investor. I learned very early that pretty much all the prominent value investors: Buffett, Munger, Seth Klarman, Joel Greenblatt, and I learned a lot from these guys. I still do, but especially when I was first starting. And one of their biggest points was net income is bullshit earnings, because again, for the reasons I just laid out, you can literally make that number whatever you want, depending on how good your accountants are, how good your lawyers are, and how much time you want to take to figure out that kind of stuff. So, I mean, these are some of the best value investors in the entire world, running hundreds of billions of dollars worth of capital. They know what they're talking about. Number four reason I don't use net income. I want to know, I think as a true business owner, as if I were to buy in it. When I look at any stock, any company, any investment, this could be a single family home, apartment complex, private business, public company's stock worth hundreds of millions of dollars or billions of dollars. I think of any kind of investment in any kind of asset as if I were to own the entire asset. In this case, companies, stocks. I want to know what these companies earn from their operations. I don't care what they do with their tax rate, because again, that can be changed at a whim of a pen, or a presidential pen. Donald Trump and Congress in the U.S. changed tax rates on corporations. I think it was earlier this year or late last year. Or, again, they can be easily manipulated depending on what the company wants to do with them. I want to know what a company earns from its operations, which is why I use operating income, or EBIT, or operating earnings. And pretty much everything I do. When I don't, and I combine that with using owner's earnings and free cash flow. Why? Those are harder to manipulate. They tell more about the operations. They're more true economic numbers than net income. Those things are all important. So my entire mindset is completely against net income, earnings, anything like that. And I literally, I think every student I've ever had, even people just on Facebook messaging me, people on the blog, or people emailing me, what do you think of net income, anything like that. I get the question quite often. And I talked a little bit about this in the my post, why the PE is useless and how to calculate EV, which I'll link below this video. And PE, net income, the E in PE is net income, or again, earnings. So that's one of the reasons I hate that metric. That's one of the reasons I never use that metric. Those are the main reasons I never use net income. It just isn't a true economic number. It's too easy to manipulate. And again, I'm probably biased in this sense, but a lot of it can be bullshit earnings. I mean, you see especially when you see bigger companies, again, this comes with the lawyers and the accountants, you can afford to do more stuff. You see adjusted EBITDA in their financial reports. It's different for every company. It's whatever they want to make the number. Again, they take out things that they don't like. They add things that they like. They make their numbers look better. And essentially, that's adjusted bullshit earnings. Because, again, they're bullshit because you can make them whatever you want. I want to know from an operational perspective, from a business owner perspective, what the company earns from its operations. I don't care about the tax rate. I don't care about the manipulation. I don't care about the smoothing of earnings. I don't care about volatility. I don't care about any of that. I just want to give me the numbers. Give me the percentages of revenue that the operating income is, and I'm good to go. That's literally all I need. I don't use net income in any of my calculations I do. Nothing. The only time I ever use even PE is to compare it versus something like owner's earnings to say how crappy of a metric PE is. I don't use PE. I don't use net income in anything I do. I couldn't even tell you if most of my companies, if any company I've ever researched has a net income that's positive. I don't know. I could tell you that unless it's an NCAV company, Benjamin Graham type cigar butt investment, I can tell you that with 99.9% certainty that every company I've ever looked at or invested in, especially, has a positive operating income, because unless it's an NCAP situation, crappy business type, doesn't produce profits from an operating level. Almost every single company I invest in has positive operating income. So net income, I don't know. That's far different. That's after taxes. It's after but again, it's not truly an economic number in my experience. This is another reason I don't use DCF valuations as well. DCF valuations usually talk about net income. I don't use net income. So, and we'll get into why I don't use DCF valuations, because that's a whole other topic that I could spend another 10, 15, 20 minutes talking about, and probably will in another video. But today I wanted to talk about net income, because just today I got a potential student messaged me through Facebook and was asking me a question about net income, and he was getting confused by it, and I told him that what it is. He was asking much question about what it is and what is the difference between this and EBITDA and those kind of things. And he was asking me if it was GAAP, and which is the accounting rules here that the U.S.-based companies have to follow. And after explaining kind of all those nuances to him, I was straight up with him. I was like, I don't ever use net income in any analysis I ever use. So, and we kind of went through why, but that conversation is kind of what led to this video, because I know I need to talk about it. I just keep forgetting to talk about it. So, but I hope that makes sense. Again, I mean, it's worked not focusing on net, and this even goes to some value investors too. I've talked with other value investors who still focus on net income, and to me, this just what I do works for me, and I tell this to every one of my students too. What I do works for me. My process that I systematize and show you step by step in our courses and programs how to do, it works for me, and it will work for you too, most likely. But not everybody has the same mindset. Not everybody has the same patience. Not everybody has the same risk factors. So you need to do what works best for you from an investment perspective, and this works for me. I don't know what my company's net incomes are. I don't know if they're positive or negative even. I focus on the operations, on the management, on competitive advantages, on massive undervaluation if it's something like an NCAP company, all these kind of things. Net income doesn't tell you anything about that. And again, if you're thinking maybe I use net income in some of the metrics I calculate, like ROIC, I don't. Again, I use EBIT in everything, operating earnings in everything I do. ROIC, ROCE, unlevered return on net tangible equity. I all use EBIT. I don't use net income in any calculation. So I'd love to hear your comments on this below. Did I make a mistake? Did I miss something that you agree with, but I missed talking about something why net income sucks? I'd love to hear in your comments below. Again, that previous link to why the PE is useless and how to calculate EV, that will be below. If you want to watch our other videos in this series, where I talk about and answer questions like diversification, why I don't diversify. What else? My thoughts on gold and silver, my thoughts on cryptocurrencies, all these kind of things where I give my thoughts on certain topics, and why I go against the mainstream in a lot of topics. Again, if you ask mainstream kind of investors, they'll focus almost 100% of the time on net income. I never look at net income, ever. So again, to get different results, you have to do things differently than other people, and that's why 99% of investors, frankly, suck, because they do what everybody else does, and especially when, in this case, it doesn't have any economic value for what the company actually does. So, I'd love to hear your comments below on this. Watch our other videos in this series. Again, talking about gold and silver, cryptocurrencies, diversification, my thoughts on retirement plans, why they suck. All these kind of things in this My Thoughts series and Value Investing and Finance Education series. We got our other series that talk about that we're turning into a podcast, actually, Value Investing in Your Car. We're turning that into a podcast, and there'll be more news on that soon. We have our case study series. We have our free training series. We have our Throwback Thursday series. We have lots of series. We give a ton of value here. And I'd love to have you a part of this community, watching our content and reading our free content, and maybe enjoying some of our programs at some point. But again, I'd love to hear comments, because I know I'm not necessarily a minority on this when it comes to value investors, but it's still not necessarily mainstream to focus on operating earnings. If you talk to pretty much anybody, again, about a company, they'll talk about net income or earnings first. Again, they mean the same thing. So until next time, I will talk to you in the next series of videos. Thanks.